Are you a veteran here within Arizona and want to figure out how to actually get a home with a 4% interest rate? Guys, welcome back to the channel. My name is Josh Zuniga, your local real estate specialist here within the greater Phoenix area, Scottsdale and Peoria. And if you're a veteran, I want this video to be for you and I want you to pay attention. What I'm about to say to you may be new, you may have never even heard this term before, but I would definitely want to make sure that you're paying attention and I'm educating you on what's going to be the best route for you and the best route for you and your family to get into a 4% or maybe even a 2 or 3% interest rate, okay? What we're going to be discussing today is called an assumable loan. If this is the first time that you're hearing about this is nothing new within the market, but this actually may be some new information for you. An assumable loan allows you as a buyer to go into it and assume somebody else's mortgage that they already have that's already existing, okay? Now, it might give you some little bit of education on this. There's only 3 types of loans that can actually be assumed. It's going to be a FHA, it can be, which has to be a primary residence. It can be a USDA, which is usually on the rural and outer skirts of the actual town. And guess what? A VA loan, okay? A VA loan. And who are the VA loans for? Veterans like yourself, okay? Now this is really I want you to pay attention, all right? So a VA loan can be assumed by a veteran, which would be you, or a non-veteran. If somebody is not a veteran, but they can actually assume this loan, right? But the reason why I find this is so beautiful for you guys is because there's a lot of homes out there that actually have VA loans on them. If you're living near the Air Force Base, Litchfield, Surprise, Avondale, Goodyear, there's a lot of inventory out there, and not even just there, all across the valley that you have now access to, and you can actually assume their loan. So what does that actually mean, Josh? Well, let me just give you an easy, plain, simple example, okay? If somebody bought a house, say 4 years ago, for $400,000. That house is now worth $400 and say $30,000 just based off of appreciation and what it's actually on the market for as far as a purchase price, okay? Well, the only thing that you have to do to assume this loan is pay the difference between the purchase price and the remaining loan balance, all right? So if they bought it at $400, 4 years later, it might be at, say, as an example, $390, all right? So that means you would have to just come in with $40,000 of down payment, and you can assume this loan, and you can assume the term on it, and you can assume that 4%, 3%. I've seen a 2.75 that we just got into a client not too long ago. And guess what? Not only did you get the home that you wanted, you get into a mortgage that is going to be manageable for you. You're not going to be paying these high interest rates. You're not going to pay a high mortgage, and you came in with a minimum amount down in order to do that. Guys, if you're thinking about an opportunity for you as a veteran, this is probably the best one that I've seen all year. And I got educated on this earlier this year, and I felt this is going to be huge value for you as a buyer within this marketplace. And I really want you to pay attention because this is going to be something that's not going to go away. So we have interest rates now that are in the 6s, mid 6s, just based off of what your credit score is and if you're a veteran or not. But even at 6%, you know, when a couple years ago when they were paying 3s, your mortgage has still almost doubled. If not, it actually has. And we had rates that were actually in the 8%. If you're looking to get a good deal, if you're looking to get a smoking deal on a home and get a good interest rate, this is the way to do it. And this is what I feel very strongly for you as veterans. And I am a huge fan and I want to thank you for your service. You know, my brother does a lot for the veterans and I just want to make sure that we take care of you guys, all right? Why? Because we care. You're out there putting your life on the line. You're protecting us. You're protecting our country, our freedoms, all of those things. And we got to make sure that you and your families are going to be well taken care of, not only but now, but also in the future, all right? Now I'm gonna revert back. This is the beautiful thing about a VA or a VA loan that's assumable, okay? You can do what's called a VA swap, right? To where if you have a house and you have your entitlement, you can swap your entitlement with that buyer or with that seller, and you can actually assume that loan. That's the beautiful thing about it. The reason why I say that is because when I have investors or if I have a seller or a buyer that's a primary residence that wants to purchase this house, the seller has to give up their entitlement in order for that buyer to assume the loan. And those deals are not working out. Why? Because that entitlement means a lot for you. It allows you to go into the next house using that entitlement for up to 0% down. But if you leave your entitlement here, then guess what? That money for that down payment has to actually come out of your pocket. So guys, this is just an overview of what the value can actually be here for assumable loans. If you want more information, I want you to go to azassumptions.com. Again, azassumptions.com, or you can reach out to me directly, josh@joshzuniga.com. Even call me or text me, 623-221-8668. I want to be in touch with you. I want to be in contact with you. This is a huge thing that can actually help out a lot of veterans and a lot of families, and I know it's going to be valuable for you. But outside of that, I want to make sure that we sit down with you, we sit down with your family, we have a buyer's consultation, we go over all the documentation, what the actual process is, the lenders that you're actually going to be in touch with to actually assume this loan and get you into that house that you want to get into, and get you into that lower payment, get you into that lower interest rate, because it's going to be a huge value, not only for 2024, going in 2025. And until rates come down back into the 4s and 3s, which I don't see in the very near future, this is always going to be a wonderful option for you. All right, guys? So like again, I said, if you need anything, feel free to call me, feel free to call my team. We'd love to get in front of you. We'd love to be in touch with you, and make sure to reach out. All of our information is going to be in the description below. But until next video, guys, take care.